Well, hello there, this is Jason Bloods speaking here. Platinum 5000 currently within I Am Mastery Academy. And what I'm going to do today is show you a very powerful strategy uh, utilizing the harmonic scanner on I Am Mastery Academy, which you can utilize to, of course, compound your trading account and see very profitable, high probability trades. So I'm going to demonstrate this for you. And of course, you want to make notes as we go along for this particular training session. The confirmation checklist for this particular strategy is very, very, very simple. So if you make sure that you utilize each of these 4 checklists, you will find yourselves in very high probability trade opportunities. So of course, we're on the harmonic scanner right now. And of course, you need an active platinum package to be able to access this. And the very first thing that you want to do is, of course, acknowledge and make sure that you are using the appropriate broker on the right hand side. And now for this particular strategy, the brokers that we tend to focus on are Traders Way and Hugo's Way. Of course, you can use any given broker, but we tend to focus on this particular strategy on Traders Way and Hugo's Way. They seem to provide the most amount of trading options. So you would come to Traders Way, you select Traders Way, and then thereafter you want to ensure that you are looking on the H4. That's the time frame that we're looking at. The H4, which is a higher time frame. Make sure you clicked on H4, and thereafter. What you want to do is, of course, look for a new scan of a currency pair. The latest currency pairs will be at the top, and the older pairs, which have already probably made their move, will be towards the bottom. So what I'm going to do is just utilize an older one just to show you this strategy in action, so you can get a bit of an example. So on this particular example, looking at the USD JPY, we are on Traders Way. We've selected the H4, and the confirmation is very, very, very simple. So what you want to do is, of course, the first thing that we acknowledge is that the harmonic scanner in and of itself is a confirmation. So the harmonic scanner is looking and searching the financial markets, looking for potential trade opportunities and entry points, right? It's an algorithm that scans the market. And so the harmonic scanner is a confirmation, or the harmonic pattern that you can see here. There's different types of patterns. This particular pattern is a confirmation of a potential trade idea. So what you want to then add to this confirmation checklist is divergence, right? You want to add divergence. Now, what divergence is when you see the market and price, right? Each of these candles represent price. When they are going in a particular direction, okay, and this particular indicator here is going in a different direction, that is what we call divergence. So again, on the USD JPY, thereafter, what you want to do is go down a time frame. So let's go down to the 1 hour chart. Okay, go down to the 1 hour chart, and then let's look for divergence. So what you're looking for is for the price and the market to be moving in one direction, and for your RSI to be moving in the opposite direction. So right here, we can identify some divergence, okay? You can see from this area to this area, price is going downwards, okay? And on the RSI, the indicator is actually going upwards, okay? Very slightly, but it's definitely there. So what you want to do is go onto the left-hand side of your screen. These are all your tools that you can be utilizing. You want to definitely get familiar with these. But what you want to do is look at your trend line. So if you tick on that particular option and obviously make this thicker, right? Utilizing these options over here, make it fixed so you can actually see what you're doing. And then you want to come to the exact point where you want to identify your divergence and click right from the bottom and drag all the way down to the point on price, where you're trying to identify divergence, and then you come down below to your RSI and do the exact same thing. Okay, so again, from the exact same point, you can see the crosshair in the middle of the screen lining everything up nicely. Okay, then you literally just drag across. Okay, drag across, and you can see you can even go up to there, or you can even have gone up to that particular point over there, right? So you can see the RSI is moving in one direction, and the market and price is moving in another direction. Okay, opposite, conflicting direction. Now, what this does is basically give a signal, an indication that a reversal is going to happen, that the market is going to move in a different direction. So if you notice, you can see all the value of the market and the price is all moving downwards here. And at this D point of the harmonic scanner, it is now shifting and moving upwards. It's now moving in a different direction. That's exactly what we want. And obviously with the harmonic scanner, it gives you these entry points. Okay, it gives you these entry points on the right-hand side, which you would, of course, use as the basis of what you're going to input into your smartphone, right? But instead of just simply taking these entry points on face value, what you want to do is add these additional confirmation checklists so that your trade becomes a bit more probable in terms of you hitting your targets. Okay, so again, the first thing we do is we've selected our currency pair, we've gone on the H4 section, then we go down a time frame. Okay, by selecting that option over here, and then we've identified divergence. Okay, and so for this particular example, we're trying to go in for a buyer, and we understand that because the entry is at the bottom and TPs at the top. We buy when the market is low, we sell when the market is high. Okay, so it's at a low point, we want to buy this particular pair. Now, so that's the sort of second confirmation. So we've got the harmonic pattern, we've got divergence. Okay, now the third confirmation is to identify reversal candlesticks. Now, there is a PDF called the Candlestick Bible that you can utilize to sort of increase your knowledge and understanding of particular candlesticks, right? But just off this particular session, you're looking for candlesticks which represent dojis, dragonflies, tombstones, right? Again, all of this can be found in the Candlestick Bible, but essentially candlesticks which are like crosses, for example. So on this particular example, right, you can see that this candle over here has a small body in the middle, and then wicks on either side, and that those particular types of candles are reversal signals. Okay, they're reversal signals. So you're looking for candles like that. Okay, right, and the fact that they're found in the area of interest, okay, alongside your divergence, is a confirmation. It's another additional confirmation for you to get into this particular trade, right? So you've got, again, your harmonic pattern, you've got your divergence, okay, and then the very last confirmation, right, very last confirmation alongside your candlestick pattern, okay, is the currency strength meter. So you would literally go to this particular website called the Currency Strength Meter, okay, and you refresh it. Okay, you refresh it. So right now, obviously, at this point in time, the markets are closed. But what you want to do is refresh it. And in terms of your currency, right? So let's say right now, obviously, we're looking at the USD JPY. We want the USD to go up and the JPY to go down. Therefore, we want the USD to be stronger than the JPY. Okay, so let's say, for example, we're looking to go into that trade right now. The USD strength meter is showing that the USD is stronger than the Japanese yen. So this would be another indication, okay, for us to say, yeah, right, we can enter this trade. If it was like, let's say, a USD CAD, right, that we were looking at, right? USD here is weaker than the Canadian dollar. The Canadian dollar's got more strength, okay? So on that example that we're looking at is USD. We want the USD to be stronger than the Japanese yen, and lo and behold, it is. So that would give us our 4 confirmations to enter into this trade. So say we get into this particular trade now, okay? we get into this particular trade, right? And look, lo and behold, we've entered. It's hit take profit 1 over here, and it has also hit take profit 2 as well. Okay, so this would have been a win of a trade. And one tool that you can add, right, just to ensure that you're using proper risk to reward, okay, is this particular tool over here. So short position, long position. Long means buy, short means sell. So we're looking for a buy, so we use the long position, okay? And you put it in the area where you'd be entering, whether it's the actual entry given, or let's say, again, directly around where you would have entered from the actual candle, right? So once you've selected that, okay, the red area obviously represents the area of risk, and the green area represents your area of take profit, okay? So let's say you can obviously adjust this to match the stop loss that's been given, okay? So that would be 22 pips, right? So you look over here, so you ignore that last digit, you always look at the first 2 digits, right? So it'd be 22 pips that you're risking in order to gain a potential of 97 pips, nearly 100 pips, right? And it shows you the risk to reward, right? So it's 4.36. So that's a 1 to 4, like a 1 to 4, 3, 6. So if we just make it round, just for example, you'd see that's a 1 to 4 trade. Okay, so you're risking 1% to make 4%, or if you're risking 3% per trade, you're trying to gain 12%. Okay. And that's how you ensure that your account stays profitable over the long term, by having good risk to reward trades. Okay, so very, very powerful. So you would have been able to hit take profit 1 and take profit 2 on this particular trade. Okay, excellent stuff. And of course, you can select this settings option of the tool and edit, right, your account size. So let's say you had 1,000 in there, and let's say you are risking 2% per trade. Okay, then the amount would adjust, so you can see if you lost the trade, right, your account would go down to 980 pounds, okay, or dollars. And if you had won the trade at the maximum amount, then your account would go up to 1,079, which is phenomenal. Okay, excellent tool to be able to utilize, right? So that's one example of the buy with the confirmation checklist. Let's see if we can look at another example of the sell. Okay, it'll be ever so slightly different, but let's bring that up as well. Okay, so this is the GBP CAD. Okay, let me just make it cleaner because I was looking at it a little earlier. So again, we're on Traders Way, we're on the H4. Okay, and again, what are we looking for? Divergence first and foremost. So let's drop down our time frame. So go down to 1 hour time frame. Okay, right. And let's zoom in just a little bit. And so we're looking for divergence. Again, we're looking for the market. So again, this is an old trade. That's why all of this has happened, but just using this for demonstration purposes. You're looking for, again, the price to go up in one direction and for your RSI to do another direction. So you can see, again, some divergence, right? Right? You can see from here to here, and then here to here, there's been divergence. Even if you look at this whole area here, it's still going in opposite direction. So if we were to draw from there to there, you can see divergence, right? Okay, if we take it from there down to there, you can see it was going in the opposite direction. So whether it's, from there to there or from there to there, you can see the RSI wants to do one thing and the price wants to do another thing. Okay, so that gives us confirmation. Okay, the next thing that we're then obviously looking for is a candlestick confirmation. Now, on this particular example, we haven't got the best candles that demonstrate reversal on this particular time frame. But if you did drop down to the 15-minute, right? Now, generally you want these reversal candles on the bigger charts. Now, you can just remove that for now. Okay, but let's zoom in. Let's zoom in a little bit. Okay. Now, that blue candle here is, again, your doji or pin bar type candle, right? That is showing you a reversal pattern followed by an engulfing candle. Okay, that particular one in the middle, the blue one, so you can see the small body and then longer wicks. That is a reversal symbol. Okay. So again, ideally, you really want to see this on the 1 hour, but you've got your other confirmations. Okay, and just want to use this for illustrative purposes. And then last, but by no means least, you would then, of course, go to the currency strength meter, right? So you then obviously go to currency strength meter. Okay, and that particular pair was GBP CAD. So again, always refresh and then have a look. GBP CAD, GBP is weaker than the Canadian dollar. So again, that would give you another confirmation for you to enter. And if you had entered on that particular trade, now the stop loss looks quite big if you were utilizing the stop loss that was given, right? So let's say you entered around here. Okay, now this would be a big stop loss if you were using that particular one. You don't have to obviously use their exact stop losses. If you're a bit more sophisticated in your trading ability, you can give yourself a bit of a tighter stop loss. But if you want to, play with the ones they're given, then no problem. But I would never generally give myself 100 pip stop loss, right? I'm just using this for an example purposes for you to look at how to enter the trades with the confirmation checklist. But let's say you gave yourself a tight stop loss and you were trying to go for a maximum take profit, you can see that if you had held this particular trade, you would have gained over 380 pips, right? Nearly 400 pips on a 1 to 4 trade, okay? Very, very powerful. And as you can see, it hit very minimal drawdown, if anything at all, and then made its way down to take profit free. Very, very, very powerful. So again, right? Again, what you're looking for first and foremost, and I guess let me see if I can quickly type this up, right? So number one, you've got the actual harmonic pattern. Okay. Number two, drop down. You can drop down to 1 hour time frame and locate divergence. Number three, candlestick reversal. Okay. And then number four, currency strength meter confirmation. Okay, you want to take a screenshot of that, you can do so. Obviously, pause this video because it's recorded. Okay, and there you have it. If you've got all these confirmations, you're able to enter the trades and compound your account. Obviously, make sure you're using proper risk management, risking no more than 1 or 2 or 3% of your account per trade. Compound your account and make sure you're journaling your trades and be consistent at this. And by all means, over a period of time, you should start to see some good results. We've had a number of individuals who have been utilizing this and seeing phenomenal results. And this is something that you can be utilizing and adding to your trading arsenal. So again, I hope this video has been helpful and valuable. And by all means, hopefully you have a wonderful trading journey. God bless.